Let's talk about some individual stocks and companies, and let's welcome on board the MD at Strides, Shasun. Shashank Sinha joins us on the show right now. Mr. Sinha, morning. Let's start firstly with the recent approval of G Susteva. Tell us, what does it bring on the table? Is it a niche drug, with you being the largest manufacturer?
Yeah, good morning. Yes, we are only the second generic to get approval for this drug, and this is a drug for the treatment of HIV/AIDS. So we expect this to be an interesting opportunity. The overall size of the market is more than 115 or 120 million dollars in the US, and being only the second generic, we expect that we'll have a good launch. The product is going to be launched immediately.
Okay, that's great to hear. Tell me, post the sale of Agila, you have limited portfolio of drugs in the US, as we understand. What is the strategy now? Will Strides focus largely on R&D efforts, or what is the strategy for you to grow further in the US markets?
Yeah, so our Agila portfolio was an injectables business, and what we are building out now in the US is an oral solid dosage business. That business is being built organically. So you're right, we have made significant investment in creating the R&D infrastructure to then ramp up this business, and that has been ongoing for the last several years. We've talked about the fact that we've been investing ahead of business to create that infrastructure. We now have a good momentum in filing. We also have good momentum in product approvals. So we are on track to file 15 to 20 new products. This is double the rate at which we were filing for new products in the last couple of years. And with the new approval timelines being shorter than they have been in the past, we expect that those approvals should come through within a 12-month period. So certainly that adds to the kind of ramp up that we are expecting to have in the US market. So it's an organic strategy, and we are going to build an oral solid dosage business in the US.
You exited the US business, or you reduced your exposure to US business right at the right time. But you're trying to enter the market where we all know that the entire landscape has changed. US FDA is much more stringent, pricing war is real, and with Amazon's entry, you don't know what the market would look like after 3 years.
Well, I can only respond to that with respect to our strategy. Certainly, Strides has one of the best compliance standards in the Indian generic pharma industry. So yes, the US FDA audits have become more stringent. The standards are much higher, but that works to the benefit of a company like ours, which has had a very successful and a very clean compliance track record. As far as the retail environment is concerned, I think Amazon is a few years out. That's premature to think that it's only 2 or 3 years away. But certainly there has been change in the retail industry, and there's been consolidation. That also makes the US generic pharma retail industry very efficient. And unlike in many other countries, you can operate that with a small sales force, because obviously the retail end of it is very well consolidated and well organized. And our strategy has always been to look at niche products. We are not looking at the mass market end. And the most severe pricing erosion has happened where competition is severe, where there are 10, 12, 15 players, and that is what is seeing high teens kind of price erosion. Wherever there is defensibility, and more than 50% of our portfolio is differentiated. And we have talked about the fact that product selection is the key to our strategy. So yes, it's not probably the same growth momentum in the US market as it used to be, let's say 5 years ago. But we are contrarians, and we believe that we are not being disrupted. We are the disruptors in the US generic pharma industry.
So right now, as US sales, a percentage of your business coming from US, where does that stand for Strides?
It's about a third of our total business.
Do you see that crossing 50% in the next 2-3 years?
Well, we are going to have certainly a much higher momentum. You know, the 50% is a result of what happens in other parts of in the other 2/3 of our business, to be honest. And we have growth strategies everywhere. I mean, in Australia and in emerging markets as well. I certainly think that we are going to be very bullish about the fact that our US portfolio is going to ramp up significantly. We expect that portfolio to double or nearly double in the next 12 to 15 months based on the fact that there is momentum in filing, as I mentioned earlier, and approvals are coming through faster. So, you know, our R&D engine is firing now, and we expect that on the basis of that, we should be able to significantly ramp up our presence in the US market.
Everyone in India or in the generic pharma industry is talking about two buzzwords, complex generics and biosimilars. Are you consciously working on those two areas?
Well, complex generics is a complex word to talk about. I mean, I'll talk about product selection of niche categories where we think that we have better competitive advantage than others. And that basically means that we will select products which are either differentiated by the product form. So we make soft gel capsules, not very common in the market. We have a lot of topical products. We have products which have extended release or modified release formulations, which are again not very common. So, you know, complex generics, I'm not going to comment on that, but our portfolio is differentiated based on, let's say, the way we pick our products. Also, there is vertical integration. So, you know, wherever we control the entire value chain, where we manufacture both the API and the finished product, we believe that gives us greater pricing or cost advantage to be able to compete in the US market, and that is the next level of let's say competitive strategy that we bring into the market. Biotech, so the parent company Strides itself doesn't do biotech. As I said, we have a oral solid dosage business, which is a non-biotech business, but we do have significant investment in a subsidiary which has been incubating a biotech business. But that's for a later discussion.
Okay. Shashank, you're also very big in Australia. Tell us a little bit more about how Australia, unlike the US, is a different market, or are you seeing pricing pressure there too?
Well, Aisha, Australia is a very different market. I would say almost a mirror image or contrast image of the US market. There are 2-3 things which are unique about Australia, and the first thing is that unlike in the US, where there is a lot of fragmentation amongst companies who supply products, Australia is a highly consolidated market as far as suppliers are concerned. So that's number one. The other interesting contrast is that unlike the US, where the retail is very consolidated, Australia by law, retail is very fragmented. So it's actually a mirror image. And unlike the US, where we have a niche strategy, in Australia we have a leadership strategy. So, you know, I mean, our portfolio diversification is almost perfect in the sense that in Australia we are the second largest company by volume. We have a 10-year agreement for distribution with the largest wholesaler, with the biggest footprint. We have also, as you know, been making bolt-on acquisitions to expand our portfolio. So we re-entered the Australian market first with an acquisition, and we added to that with other acquisitions. So today we have about 2/3 of our portfolio is already in place, but 1/3 more to go. We are about 2/3 of the way in our distribution footprint, but there's 1/3 more to go there, and we are executing to that strategy. And as we do that, clearly we are aspiring to be market leaders in Australia, and when we achieve that, we will certainly have the operating leverage and the knock-on benefits of that on our overall profitability and margin structure in the Australian business. So we are very bullish about our game plan in Australia.
And I understand that you're already part of the Big Four. How soon before you actually become a #1 player in Australia?
Well, you know, we have our aspirations. If we execute our plan according to our own kind of strategy and the way that the building blocks are in place, we should be there in 2 to 3 years.
Okay. Tell me about what's the outlook then on the Africa institutional business. What is the likely growth considering competition from other Indian players is now increasing in that particular region?
Yeah, so the institutional business has obviously been in a bit of a phase where there has been delay in the orders, and that has happened because the 3-year award period for the institutional contracts, they were given on time. We have received our tender awards, and we have a 3-year kind of tenders awarded to us. We have our market share. The beneficiary governments in Africa need to receive the funds and then place orders, and that is kind of got a little bit stretched out. We think it's a timing issue. Overall, with one player back in the market who was out of the market, we think that the redistribution of tender awards will be back to the historical levels. And you know, we don't expect huge growth there, but it's a business which is only kind of have 5 or 6 pre-qualified vendors, and we are one of them. And we have our market share as far as the tender awards are concerned. So, we also have a pipeline of products that are in registration, which will expand our product portfolio, and we'll be able to participate in other tenders which we have not been able to do in the past. So we believe that, you know, there is a good rebound in the institutional business. It's hard to say what the growths are going to be, but you know, all the sort of key blocks are in place from new product point of view, and also from our winning the tender awards.
Okay, Shashank, great. Good luck to you, and we will chat again soon once you do become the #1 players in the dominant regions that you operate in.